kind of volatile and sometimes unpredictable. But one thing is for sure, that rally momentum is still there for the cryptocurrency side for this time, but we wouldn't be sure of how long it could take this momentum to end. Okay, so let us begin the top news of the day. So as usual, we will be having some remarks that to show you guys what happened on the market yesterday. So we do see that from global stock indexes mostly eased by 0.11% on Wednesday as investors start to feel that the Federal Reserve will be able to create a soft landing for the US economy. When we are seeing the Dow Jones and S&P 500 ended lower, meanwhile we are seeing Nasdaq was flat. And there is some news coming out from the US side where we have seen that new home sales falling in August, which had little impact on the market, but also applications to refinance mortgages surged for a second week on the cheapest borrowing cost in 2 years. But the main data is coming out from the last Tuesday where they added worries about the labor market, where people are very I think it's wrong. It shouldn't be optimism, but yeah, it was getting lower and lower that people from the American side are not that confident regarding the state of economy. And as a result, traders are now pricing a 60% odd of a 50 basis point cut at the next Fed November 7 meeting, up from 37% possibility and a 41% chance of a 25 basis point. And in Treasury, US year yields trust traded up by 0.05% towards 3.78%. Meanwhile, we are seeing some market movements on the Chinese yuan, when we are seeing the Chinese yuan gave back earlier gains a day after China's central bank unveiled its biggest stimulus since pandemic to pull the economy out of its deflationary funk and back towards the government's growth target. And a partial gauge of Australian inflation cooled in August as government assistance to cushion the impact of energy costs started to drag down the headline of inflations, and we will be talking about that part. And meanwhile, we are seeing out of the London area news where we have the Bank of England policymaker Megan Green say that she prefers a cautious, steady as she goes approach to cutting interest rates, warning of the threat of strong wage growth and a lower economic activity on the coming months. And as a result, the dollar index managed to rise by 0.7% to $191 and bounced off a 14-month low against the euro, where we are seeing the euro was down by 0.41% after earlier reaching the highest since 2023 July, and the dollar managed to gain by 1% plus against the Japanese yen towards a 144.68 yen against the dollar and almost reached its highest since September 3rd. Moving on the commodity side, so we are seeing that oil prices decline as supply disruptions concerns in Libya already eased, when we are seeing Libyan factions reach a compromise on appointing a new leadership for the OPEC members' central bank, eventually returning some of the country's recently shuttered oil productions, resulting the US crude fell by $1.87 to settle at $69.69. And in other commodities, we are seeing that gold rose to a record high after reaching an all-time high level of $2,670 as expectations for another big rate cut by the Fed helped bullions rally. All right, so we will be talking about the main news week of this event, where we are certainly will be seeing that we have a news coming up from the Australian government last night, so we'll be talking about that. And I will be giving you guys some small updates on the Chinese side because I know that not a lot of you guys do trade on the Chinese stock market or even invest in the stock of Chinese companies. So I will be just giving you a slight updates on what really happened from the Chinese sides and what update that they have given to us and what can we use on that. And probably the most interesting thing that we could be trading on it will be on the stock indices side of the Hong Kong side, which I believe that most of you guys do have the options to trade on those indices side. And yesterday we already have something came out on the Switzerland rate decisions, which I believe I have shared some insights on the short videos that I've shared. And we will be having some good news coming out from the US side. So probably there will be some volatility on tonight's gold market and definitely the US dollar index. And we will be having some remarks from the Jerome Powell after the 10th annual US Treasury Market Conference. Okay, so we already have today's decisions of the Switzerland Central Bank. They have already decided to cut the total interest rates by 25 basis point from 1.25% to only 1%. So that's a very positive news and the market already make a declining move for the Swiss franc, and then the market has started to reappreciate those currencies. I believe that those market movements are really sensitive and really time and really event sensitive as well. So afterwards, the market has started to go up higher than what we have already been seeing. So I'll be taking a look at that later on. And let us see from tonight's currency strength charts. As you guys can see, Australian dollar remains at strength alongside with NZD as well as the GBP and the euro currency started to weaken. So we will be probably seeing some strength coming up from the Australian dollar, New Zealand dollar with the weakening side on US dollar tonight after its strength coming up from last night. But one of the very first key things that we could have been seeing, Swiss franc also started to weaken. So it's probably going to see but one thing is for sure, US dollar started to go weaker compared against the Swiss franc. So I will be seeing that it managed to retain its momentum on USD CHF and there should be some support on those area around 0.81 towards 0.84. So I believe that currently the prices are just moving around the support area, hasn't been able to break down of those descending triangle that I've shared with you guys on last night. Okay, so I will be talking about this later. Then I will be sharing on what really happened on the chart side. So yesterday I do believe I shared this signal. If you guys do follow the live stream, I believe that most of you guys would have been able to receive this signal. And these signals are still valid and you can still use those signals to trade, honestly speaking, if you guys manage to find those entry prices. But I believe that most of you guys would have missed those entry points. So the best thing that you guys can do would be by joining our updated sessions of our live streaming so you don't miss the chances to join our live streaming and don't miss out any signs that I could have been giving out to you guys. Okay. All right. So let us see that the market is still continuing its uptrend. So it's a very definite market and it's already reached its third target price as well. So right now it's very possible for you guys. I believe that most of you guys who do trade on the gold market, it's a very obvious market. The market has been trending higher. And I believe that most of you guys would have been bullish rather than bearish. And right now it's still a good time to do a buy. Possibly it's just a bet, it's just a worse risk and reward ratio, honestly speaking, guys. Okay, so if you guys want to ask me anything, I believe that in the video there's a descriptions where you can click on it and join on the discussions chat room. As you guys can see, there's a link where you can choose the chat room or you can guys choose to enter the live streaming. So you can guys join the chat room and have a discussions with me for you guys to have any questions or any inquiries that you want to ask. You can directly ask me on that chat room. So make sure that you guys click on the descriptions on that YouTube video below and click on that link for you guys to have a discussions with me. Okay. So overall, right now, what we are seeing from the gold market after breaking higher than the possible consolidations phase, it's now already breaking through this high and started to go higher. And right now, what is the best case scenario that we could have done? So one of the very first things that we could have done right now is to be bullish because the market trend is very obvious. But if you guys do miss out the opportunity, you guys shouldn't be rational and try to make a short positions because I believe in a very strong market positions when we are seeing that the market is likely to only go higher rather than going lower, it's a very bad choice to do a short for now. So right now, the best decisions to be doing would be maintaining a standing positions on the sidelines while waiting for a good entry point to continue that uptrend. So if you guys are short-term trader, long-term trader, it's the best choice for you guys to stand on the sidelines waiting for a good entry point for you guys to enter the trade rather than forcing it right now and then incurring unnecessary losses because I'm seeing that there's a possibility of a corrections before it could continue going higher. But those corrections won't be huge, won't be long, and there could be a possibility it will be just happening in just a matter of seconds and minutes before it could be going higher back. But sometimes it could be going slower. But one thing is for sure that you guys need to be patient if you miss the opportunity to follow this trading signal. Okay, right now it doesn't seem a very good point to do that trade. And right now I will be more on the waiting side and maybe try to wait around this area. 2673 towards 2675. And probably with that, we can decide whether we need to trade it or not, depending on the situations. But my view is still very much clear that I'm still very much bullish on the gold market. Okay, so the trend of the gold market is still very clear, but it could have gone off tracks because the market momentum has been quite strong on the gold market over the last few months with the purchase of golds by central banks around the world, including consumers. So that definitely would have helped the price of gold to retain that momentum. But right now, I'm expecting it could be reaching around 2675 before going higher. So I will suggest you guys you can enter the trade around 2674 towards 2675 and aiming for a price target around 2680 later on. But we will be waiting for the price actions to form before deciding anything to do. Okay. So if you guys are short-term trader are interested to do just for a small bucks for $1 to $4, definitely you can try to short and try to aim around 2674. Okay, then I'll be looking through silver whether there is any good chances to trade on it right now. But it seems that it won't be giving us a lot of differences, I believe, because right now it has already broken off that resistance area. But I do believe that the momentum is still quite strong on the silver side rather than comparing with the gold. So probably if we look at a longer time frame, we will be able to find some good entry points, honestly speaking, guys. And okay. So let me give you guys an outlook on the silver. So something has changed on the silver market for now. So I'll be giving you guys an update on it before giving you guys the possible signal that I could have been seeing on the silver market. Okay, right now what we are seeing is that the silver market started to give us some good conditions where we are seeing after breaking down the initial uptrend momentum, right now we are already seeing that the silver started to break out of its all-time high levels. As you guys can see, it already break out of it and even managed to build up some bases, which we are seeing the possibility of a cup and handle and also had an inverted head and shoulder. So that's a very good sign on the long run, and we can definitely right now be bullish on the silver market. Okay, so I will be giving you guys a buy signal on the silver right now because I'm not seeing any clear momentum out of the gold market. So I'll be giving you guys the signals for silver market for now. Okay. Probably you guys could have entered at a better price to make sure that you don't get hit by a longer stop losses. So I would suggest you guys to enter at lower prices, cut your losses just below that low, and try to aim for around 32.75 and 33. Okay, so it's better to wait for a good entry point and then you can try to trade on it. Okay, but if something happens, even breaking higher than 32.6, you can immediately enter the trade. Okay, so that's what I'm saying since it's already breaking out of the all-time high levels. Okay, next I will be talking about the USD CHF, what has happened, and give you guys some updates on it. So as I've said last night that during the live stream, I'm seeing the possibility of the US dollar weaken and also the immediate downfall of the CHF. And I'm recommending a trade around this price point yesterday night. And it seems that currently the trade has given us some results, even though it doesn't reach around the support area. But I still do believe that momentum could still persist. Where we are seeing a very obvious signs of a clear downtrend, and also one thing is more certain, other than a downtrend, we are seeing the possibility of a bearish flag. As you guys can see, so I'm seeing the possibility of the continuations of that bearish flag. So that's the opposite of the bull flag pattern, but definitely we can use it and try to aim for a price target of 0.81 per dollar of Swiss franc. Because I'm seeing that possibility happening, and there's still a huge chance to do that trade. It could take sometimes a longer time, but in terms of risk and reward, it's a very satisfying trade. A risk reward of a total of 30, and you can put your stop losses still just above that. So I believe that this trade could be heading towards in another two 1 to 2 weeks, and it could probably take as long as 1 month. But if you guys are a long-term trader, you can do that. But if you guys are a short-term trader, I still do see the possibility of it to go down as much as here on the short term, which could still give you guys a much better risk and reward ratio of around 4 to 1. So that's a very good risk and reward ratio for you guys to enter this kind of trades. on the Swiss franc USD. All right. So that's a sneak peek preview on what really happened on the USD CHF after they decided to cut interest rates and what is happening on that side. Okay. So moving on, I will be giving you guys some updates on it. And let us check on the Euro USD. So I'm still pretty much convinced about the possibility of the weakening on Euro since I've drawn it. It could be going higher, lower, higher, and lower in the upcoming months. And you guys can see I've given multiple signals on selling Euro compared to the buy signals. And the buy signals are mostly when it was on that uptrend. Afterwards, I'm mostly are giving much more bearish signals on the Euro USD. But currently, it's too tricky to assess the situations because right now we are still in a very confusing market on the Euro USD trading between these ranges. So I will be expecting there will be some market volatility and it will be a very volatile trade. But if you guys could do that trade on a short-term basis, try to sell around here, buy around here, sell around here or here, and then buy back around here and sell around here or here. Though, so that chances of that trading sideways ranges are still there. Okay. All right. So I will be moving on. But I'm very clear on the market directions of any pair that is against the US dollar. I believe that most of it would be still long, but it's just the exceptions for the euro side. Whereas we are seeing from the pound sterling side, I'm still pretty much bullish on it. And I believe this price target has already been reached. So if you guys have joined the previous live training sessions, this signal has been giving you guys profit. But the market trend on most of the currency pairs that is against the US dollar is pretty much clear. It's going higher and we'll be seeing that momentum continuing in the future. Especially, we do know out of the Bank of England, they are more likely to retain the interest rate, and the US dollar will be weakening in the futures with the expectations of another 50 basis point cuts from the futures market. And if we try to look at other pairs, let's say USD CAD, I believe that the continuations of the downfall of the let me check what happened on the short side. All right. Okay. So for you guys to look at USDCS, USDCAD is still pretty much clear on that market directions. I'm still seeing the possibility of it to go weaker and weaker. And I've even given multiple recommendations of sell on USDCAD across the live streaming session. So if you guys are early member or if you guys do notice our channel, I've been giving out a lot of signals on almost all currency pairs. And one thing is for sure, the trend on the USD CAD is very much clear. It's going downwards after breaking up breaking down of that major uptrend, and right now it's already started its new downtrend momentum. Okay, so it's very much clear that the market is going lower and lower for the USD CAD, and you guys can probably enter the trade around the current prices, put your stop losses just above the high, try to aim around 1.34. Okay, so that will be one of my suggestions for you guys if you guys are interested to trade on the USD CAD. All right. So let us check the other currency pairs. Oops. All right. So for the Japanese yen pairs, it's especially compared against the US dollar, it will be kind of a trading tricky market, as we know that there's a lot of fighting and resistance, so there will be a lot of volatility against the US dollar Japanese yen pair. But if you guys do like to trade on the ranges, try to find that ranging momentum. I believe that on the US dollar Japanese yen pair could be giving you guys a lot of reason to trade on that sideways range. So if you guys look at this daily chart, it's very obvious you guys could have been trading around this sideways range for over the last 2 weeks. And in this way, it's also been trading just around these ranges. So actually, this trading pair has started to become a kind of a favorite for the sideways traders. As you guys can see, the momentum is very clear, giving you very good signs to trade on the sideways. Okay. So if you see from the charts, sell here, buy here, sell here, buy here. So for you guys, a short-term momentum trader, definitely this is one of good trading pairs for you over the last few weeks. So you guys can see trading on the support and resistance area. But one thing is for sure, we are starting to see the weakening of US dollar right now. So if you check against the Australian dollar pairs, against USD, I'm starting to see some strengthening signs. Okay, so yesterday I do suggest if you guys are interested to do this trade, you can put your stop losses above here, trade it around this area. I believe that it has already reached its target price around here. Right now, it's not a good time to do the trade because it seems that it has started to almost reaching near our stop loss level that we have discussed yesterday on that live stream sessions. And right now, the momentum has gone to bullish because I say I just give you guys some recommendations to trade on that volatility because I'm seeing the expectations of it going lower, as you guys can see, and then rebounding higher in the next few days. But I'm not expected that it would be rebounding as fast as just in a day, guys. Okay, so that's kind of surprising, and but at the very same time, so we do know that the market has been kind of very good market for a volatile market movement, especially on the currencies market these days, because there is a lot of things, because there's a lot of things going on from that side, where we are seeing that market volatility has been kind of good on the currency pair side, and it will be definitely impacting the Australian dollar side. And I'm also seeing the possibility it will be impacting the New Zealand dollar pair as well, because I've been giving a lot of recommendations as well over the last few days for you guys to buy NZD USD, as you guys can see where I put the candles. So that is the prices that I've recommended on it over the last few months on the live stream sessions. And right now, I'm still also seeing the possibility of the NZD US dollar to go higher and higher, even though there is no surprise momentum. But we do know for one thing for sure that the US dollar still weakens, as you guys could check on the US dollar index. Because we are seeing that the overall current momentum of the US dollar index. So this is the long run for the US dollar index. As you guys can see from this chart, that the downtrend is still very much clear, even building some double top signs and definitely a topping phases around here. And we are started to see some cracks and the immediate downfall of it. As you guys can see, even a possibility of a bear flag, and it seems that the market it seems to started to price in the possibility of that 50 basis point cut in the future, and people already started to depreciate the US dollar index as fast as possible, even respecting those downtrend lines that we are currently seeing. As you guys can see, the initial downtrend line has also already started to get into those ranges and even respecting those downtrend momentum and unable to maintain its prices above this downtrend area. And one thing is for sure, with the weakening of the US dollar index over the past few months, I'm still seeing the possibility of that weaknesses to continue in the upcoming months. I believe if you guys do trade on any other currency pairs that is against the US dollar will be very beneficial. And probably I will be just suggesting you guys to stay away from the Euro USD trade because I'm still seeing a lot of volatility and the weaknesses in the Euro economy. So it's much better to trade like GBP USD, AUD USD, NZD USD, USD CAD, as well as the USD CHF. So I'm thinking that will be a very good choice to trade on it, okay? Because I'm seeing this possibility happening in the future. All right, guys, so that would be the scenario I am envisioning for the US dollar index in the future. Okay, so if you guys want to trade, let's say on those other pairs, I definitely recommend you guys to do on that trade. AUD USD I've already shown you guys, and the USD I've also have shown you guys. GBP USD I've already shown you. What else? Mm, I think that's most of the trading pairs on the currency side. So I'll be giving you guys just a small update on the gold. Okay, so right now it seems it has started to go higher and higher. So a buy signal could be on the way. Try to enter around 260.80. Put up stop losses just below that, 2675. Try to aim for 2685. Okay, so I'm still much more convinced it could reach its first price target, but afterwards, the other two price target, it is a possibility because we are trading on more short-term basis, and you guys could have cut your losses probably around 260.75 towards. Okay, all right. So if you guys are late, you can definitely try to enter at higher prices and try to aim for a tighter stop losses. But if you guys do have entered the trade, I believe it's still a good time because I'm seeing that from the silver market, it's a very positive signs because we have been buying from 32.5. Right now, it's already reaching its 32.7, so it's already near there. Okay, so I'm still seeing that this uptrend could still continue, guys. Okay, all right. So just a notifications for you guys. If you guys do register as a VIP member, I already shared a signal before the live streaming, and I believe that price target has already reached its third price target. So it's just a friendly reminder for you guys that those price target has already reached its destinations, guys. Okay, so it has already reached its third target price on that signal. All right. So I'll be continuing back with the lessons before I look back at the charts because we need to know price actions to really help us to see clearly on the market where is the possibility scenario that could in terms of what happened on the Chinese market. So I'll be sharing some updates on you about the Chinese market because this stimulus has been impacting all across the market, including the gold market, the US dollar indexes, the stock market around the world. So it's very important for you guys to have a small updates on the Chinese market. Okay, so from these slides, you can practically see what is the main topic that the Chinese government governor of Ban Gongsheng has been stating, and he already stated the a cut in the reserve requirement ratio, which is also including the 7-day repo rate and also the existing rates in order to boost lending and reduce existing loan burdens. And also a triple R cuts are possible. And he will be also providing the announcement of at least 500 billion yuan of a liquidity support for stocks. So that's why we have seen a very positive signals coming out from the stock market across Chinese market, Shenzhen, and also the Shanghai index, as well as the Hong Kong stock market. As we can be seeing the details, there will be a swap allowing securities, funds, insurance companies to tap the PBOC to buy stocks, and also told that they are setting a stock stabilizations fund without clear details, but it's very sure that this one will be used to stabilize the stock market. And also, the Chinese Securities Regulatory Commission's chairman Wu Qing said that new measures to encourage mergers and acquisitions will be unveiled soon and underscore the CSRC's work to improve regulatory oversight. And also, the National Financial Regulatory will add Tier 1 capital to six major commercial banks. Analysts welcome this stimulus but also caution that it doesn't represent the bazooka that many see as needed to get Chinese consumers to spending up again. As more, a lot of people are seeing that lower mortgage rates could help, but it's not enough to revive the housing market. And as a result of this regulatory movements and announcement, stocks in Hong Kong and China rose an announcement where we are also seeing the 10-year yield on the Chinese bonds fell to 2% for the very first time on record. Meanwhile, the offshore yen was little changed after this announcement, but we are already seeing the strength coming out of the Chinese yuan after the Politburo meeting and the release of a further more details. So this is a small update for you guys. And if you guys do trade on the stock indices, especially on the Hong Kong indices, I believe that you guys should have been pretty much would be in a bull positions buying those stock markets and hold on those gains. Okay. So I will be back with the main topic, which will be talking about the Australian CPI data. So you guys can see that the CPI data was actually quite positive for the market and as a result, even the currency retreated from the high. But eventually, with the weakness still persisting on the US dollar side, it still gave back all those retreats, and right now it's almost reaching those 19-month high. Okay, so as you guys can see, the CPI advanced just 2.7%, the very first time it fell between the 3% upper band of the Reserve Bank's target. And the other measures, such as the three main core measure, also fall down, where it strips out volatile items, and the main focus of the RBA started to ease from 3.4% to 3.4 from 3.8% towards 3.4%, and both of those measures has been the lowest since for 2.5 years late ago. And the details about that, housing still climbed by 2.6%, food and non-alcoholic beverages are up by 3.4%, meanwhile alcohol still rose by 6.6%. Federal state energy rebates drove a 18% fall in electricity prices, while fuel was 7.6% lower. Rents were still high, 7%, reflecting the tight market rental conditions in most major cities in Australia, where new dwelling prices, which captures new builds and major renovations, rose by about 5% and still remained at 5% target for the past years, with builder passing on higher costs for labours and material. So from these details, we do see that from the Australian economy that the main drivers of inflation are still alongside the rental market, the housing market, and also the cost to build new houses and renovations were pretty much driving up inflation side. But also we still do see alcohol, tobacco, and also food prices are still pretty much the main focus as well. But we do see something drastic coming up, especially due to the fall of electricity prices, due to the rebates of the federal and state energy side. But I'm expecting with that, contributions from the federal and state energy rebates couldn't last long unless this policy would be permanent. I'm not seeing the possibility of the inflation side could be a long-term basis. But one thing is for sure, fuel definitely helped to lower down the inflation side of the Australian economy because we are seeing oil prices are down from $80 plus. Right now, it's just around $70. So that's almost a decline of at least 12% plus. So that's a very good help. And that's why we are seeing that those inflation numbers are going down on the Australian side. And this data came where the RBA just said they will remain at 4.35%. And since that Australia hiked less deeply than the peers, which resulted in its benchmark rate being 1% point lower than the Federal Reserve, saying it still remained vigilant on the upside risk because on a monthly to monthly basis it could be quite volatile and also doesn't capture the all items inflation rate and could be influenced by one-off or temporary factors. So these temporary factors could be coming up from the fuel side, guys. Okay, and also for the Federal Reserve and state energy rebates. And Bullock also said that if Wednesday data came in with a 2, it just doesn't mean we've got inflations under control. That's very right, guys, because it's just 1 month data. And it also doesn't mean inflation is sustainably back within the 2 to 3% target range because their main goal are making sure they remain at that 2 to 3% target range. And as a result, the yield on the policy sensitive 3-year government bond notes trimmed the intraday gain and the currency retreated. But since then, it has already started to bounce back higher. Okay, so that's why this data doesn't mean anything from the RBA side because they are already expecting a 2 point plus percent inflation side, but they need it to remain there for a long time to decide to for them to be able to decide for the further reductions on their interest rate side. Okay, so as you guys can see, the inflation rate has been falling less compared to the other peers because we know that Australia rate their hikes kind of 1% point lower. So I believe that could really help to let the other nations to see the impact of a lower 1% rate hike before the pandemic side. Okay. And this is the current monthly CPI. It's already between that 2% to 3% target range for now, just for now, because they want it to remain around these prices, 2 to 3% target range. And that hasn't happened for now because it's just for the very first time over the last 2.5 years, you guys, for that inflation side. And one of the very main concerns that is proving sticky on the inflation side will be coming up from the service inflation, guys. As you guys can see, it was still about 4.2%, still above that 3% target range. Okay, so from service inflation is still quite high. Okay, but the overall goods inflation started to fall down just around 2%. So that's a good thing on the goods inflations, but from the services side, it's still quite high. Okay. Okay, so I believe that this signal could have been giving you guys that first profit target since I've shared the signal. Okay, and let us check back that silver signal. It hasn't reached those price target, honestly, guys, but it was near there. Okay, so if you guys haven't take profits, I suggest you guys take profit because it seems that it started to consolidate around these prices. Okay, so I will be coming back with Australian dollar news and seeing what could be the reality happening. So as you guys can see, right now we are very certain that with the arrival of those data, it didn't really mean too much. And right now we are seeing the possibility of the Australian dollar still going higher, with the note that the US dollar index still remain weaker because one of the biggest struggle of the Australian dollar, or I mean the US dollar index pairs, that if the US dollar started to go stronger, I'm afraid that it could be kind of volatile market like the last 3 days because it has just been moving around these ranges and it hasn't been able to break out of it. Until the US dollar started to weaken, I'm expecting that it could go very high in a very short time. But before that happens, with the US dollar still remain trading on those sideways range, I'm still expecting these volatile market movements. But one thing is for sure, I'm still very bullish on the Australian dollar market. But currently, we are not seeing the good signs to do an entry right now because what we have been just seeing after reaching around this resistance high, it managed to drop back below. But one thing is for sure, I'm still seeing that uptrend momentum sustaining. That's for sure. Okay. But if you guys want to trade on it, you can try to buy here, put your stop losses just about here. So you can buy around 0.687, put your stop losses just below 6.854. Okay, so you can try to do that by trade on the Australian dollar, US dollar, but I won't be just writing it because I will be talking about the other trading pairs to let you guys know any update that has been happening on the market side. Okay, so I'll be back with this slide. So bear with me for a moment because it's very important for you guys to know what happened on the fundamental side to decide on whether you can see the possibility of that currency pairs of that nation could be going higher in the future, guys. Okay. All right. So I'll be discussing from the Japan side right now because we do see a possibility of the strengthening on the Japanese yen market. And there could be some momentum. So the previous slide, we are seeing that is the governor of Kazuo Ueda. So he is currently the governor of the Bank of Japan, and his influence on the market is quite strong. As you guys can see, he's above it, and he's pretty much on the hawkish side, meaning that he is preferring for another increased rate hike in terms of its market movement. And right now, in terms of the fundamental side, I'll be discussing about that in a short. It is certainly saying that the Governor Kazuo Ueda is just reinforcing his statement, where he is seeing the possibility that the Bank of Japan will raise interest rates if data allows. But currently, the data hasn't been able to do so, and they won't be in a hurry to do so, and indicates a little chance of a move at the next month's meeting. And these latest comments come after Ueda sent a similar message last Friday when the board voted anonymously to keep the rate on hold. And in making policy decisions, so this is part of his remarks, saying that the Bank of Japan will need to carefully assess factors such as developments in the financial and capital market, home and abroad, and the situation in overseas economies underlying this development. We have enough time to do so for them to stay back and look at those data before deciding for another rate hike in the future. So they are much more interested to wait and see later on it. And this offered dovish hints about the price outlook, saying the upside inflation rates appear to be easing given the recent yen strength. And if the outlook for economic activity and prices presented in the outlook report is realized, the bank will raise policy rate. So until that, what the Bank of Japan has been looking for factors on the inflation side, he will be much more on the sidelines. And he also said it would be appropriate for the policy rate to be neutral if the consumer prices are around 2%, and a neutral rate level that's neither stimulative nor restrictive for the economic activity. And even speaking to reporters after the speech, Ueda declined to comment on how he might respond if a new government proposed a rate hike. Because we are going to see there is some Liberal Democratic Party elections on Friday, which in a poll, there's also essential who will be saying that who will be succeeding Fumio Kishida as the next prime minister, and BOJ watchers are keeping a close eye whether the Sane Takaichi, which is a strong advocate for monetary policy, will secure a victory, said on Monday that a rate hike now would be stupid, as the nation needs loose monetary policy to secure the end of deflation. However, against that backdrop, the measured tone of US's latest remark will likely cement the view BOJ boards and BOJ watches that the board will be concluding on holding its rate next meeting on October 31, and almost most economists expected that the bank will be waiting until December or the latest until January before takes the benchmark rate higher after having raised rate twice this year. Okay, so with that, it is that we are seeing the possibility of the weakening of the Japanese yen. So if you guys try to check AUD Japanese yen, probably could give you guys some good entry points because we guys see that after breaking out of the resistance line, you can see it's going higher and higher. It's also the same case for NZD JPY, GBP JPY definitely one of the choice, breaking higher than that. as well as also on the CADJPY. But currently, we are still seeing right now most of those trading pairs currently is in the resistance area. As you guys can see, most of it are currently reaching the high reach around the 2 or the 2nd or 3rd September. And most of those trading pairs are unable to break higher than that, meaning that a lot of people are seeing these resistance lines also very much important compared to the one below. As you guys can see on the Australian dollar side, we have a resistance line around 99. After reaching 99.7, it go over towards right now 99.2. So I'm expecting this resistance line is very important, as well as you guys can see from the NZD reaching the resistance line, and right now it's just stuck between those price ranges around 90.3 towards 90.9, unable to break higher than that. As well as we could also be seeing almost any trading pairs against the Japanese yen, meaning there's a possibility there will be some weakening on those sides. Okay, guys? Because I'm seeing the possibility even building a new downtrend momentum on this side, as you guys can see. So until most of these trading pairs could break out of that downtrend, which if I draw it one by one, it will be showing you guys a very similar idea that the downtrend is still persisted on most of the Japanese yen side, meaning that the Japanese yen strength could be continuing in the future because most of the economists are still seeing the possibility of a rate hike in December, the earliest, or a rate hike, the latest, on January side. So overall, we could be much more the waiting side for this time because I'm seeing most of it are still going to be weakening on most of the Japanese yen pairs. Okay, so I'm seeing that weakening still persisted on most of the Japanese yen pair, meaning that Japanese yen could be going stronger and stronger over the coming weeks to months. And a lot of the markets has been already pricing in with that expectations, unless it started to break out of the previous resistance of high over the last 2 months, and that could be the case where we would be seeing a double bottom and probably forming another new rally before the December meeting because a lot of people are expecting a lot of rate cuts or a lot of rate hikes on December. Okay, Euro Japanese yen definitely will be kind of weakened. As you guys can see, it hasn't been able to break the previous sell area, resistance area until now, and has been moving in a sideways range for almost all the Japanese yen pairs. Honestly speaking, guys, it's been trading sell here, buy here, and then you can sell here because the market moves very volatile for now. Okay, so I won't be recommending any buy signals on those Japanese yen pair because right now it's not the right thing to be doing that trade. All right. So it comes back towards our entry price, but I will be much more on the waiting side because right now we are seeing the weaknesses are coming out. I believe it is stemming from the strength of the US dollar index, I believe. So I'll be giving you guys that check, but I suggest you guys who have entered this trade, you can definitely try to take profit now, even though it hasn't reached the price target because I'm seeing that weakening could be happening lower and lower. Okay, so I suggest you guys who have been following this live stream and you still hold that trade, even though it hasn't reached that price target, I've already been suggesting you guys, but right now I'm typing it up so you guys don't miss it out because if you guys don't hear me clearly, I already said it twice that you should have been taking profit even though it didn't manage to reach those price target. Okay, so I will be back with the lessons and it will be talking about the GPB side and it will be giving you guys that update where the GPP from the government of the BOE and the official members saying that they won't be cutting interest rates because they are still seeing high factors of inflations on that side. Okay, so this is Megan Green stating that for one of the BOE official members saying that on the Northeast Chambers of Commerce that she prefers a much more cautious, steady as she goes approach to cutting interest rates. And what is the reason for that? Because she is seeing that the warning coming from the strong wage growth and also the waning of economic activity. Because Green has also cautioned multiple times against reading too much into the falls in service inflation this year, because underlying measures stripping out full-time components has been trading around 4 to 5% on that inflation side. So this is part of her statement. It's certainly moving in the right directions, but she wouldn't get excited because component of service inflation is labor. So as wages come down, hopefully inflation will come down. And she is looking for evidence for that risk diminishing because that means she is trying to see that inflation rate from the wage side and also services to go down. Before that happens, she is not that convinced to do a rate cut, guys. Okay. And the probability of that happening would be coming with spending being surprisingly weak given incomes have recovered, but consumers have pulled back on their spending and parking much of their higher real incomes in savings. And as a result, the MPC voted to leave interest rates unchanged at 5% last week, emphasizing the need for patience after cutting for the very first time since pandemic in August. And it has three scenarios of the threat that inflation still poses, including one where inflationary pressures are more ingrained and wage and price setting are affected. So one of her statement on Wednesday has also been saying that she wants to be certain of that danger of permanent changes in price and wage setting has passed before she can support a quicker loosening in policy. Because she also echoed the governor Andrew Bailey, saying that a gradual approach to reverse the central bank's most aggressive tightening in decades. Meaning they are started to see the possibility where the economy is weakening and that would be leading to a lower inflation. But that's the worst case. That will be the worst case scenario because that will be hoping for the economy to go down while just to be able to support the notions of a lower inflation side, which is a very bad thing. Okay, guys. And as a result, money markets are already fully pricing in another cut in November, but put the chances of a follow-up move in December up to around 60%. And as a result, the sterling was down yesterday, and afterwards it went back up again, following Green's comments after hitting its highest level in over 2 years on Tuesday. Okay, so this is the data to show you guys what happened. CPI has already fallen down, so that's one of the good things, around 2.2%. But service inflation was quite high, still around 4.5%, I believe. So this is the main reason that the official members, like Megan Green, saying that inflation is still pretty much high. And as you guys can see, wage growth, a determinant of the service side, seeing that regular pay growth and regular private pay sector pay growth are still around that 4 to 6% level, meaning on average 5% of wage growth are still there, meaning this number still could contribute a lot towards inflation with this high number of inflation side. Okay, so that's why we are this coming out from the GBP side, we are seeing the weakening. After the release of the comments, the BOE started to weaken and then going back higher today. But the overall trend is very clear. It's still going higher for the GBP side, but it's going to probably take some time before that continuations comes up, especially there's a possibility of the strengthening of the US dollar. So it could be just bouncing up and down, but the trend is clear, it's going higher. So I'm still pretty much very bullish on the GBP side against the US dollar. But right now it hasn't been able to give us a clear indications to enter the trade because currently we are seeing it has just reached one of its resistance and trying to find that base to build that consolidations to go higher later on. So I won't be recommending any of this. Okay. USD CAD started to strengthen. Okay. So for you guys to see what happened on the US dollar index, I believe it has started to strengthen. Okay. So let me give you guys that outlook. Okay, it seems that US dollar index started to weaken, but surprisingly, against some of this, gold prices have started to weaken. Something must have happened. Okay, but so far we will be waiting for the news side around another 17 minutes, meaning that before the news, people are already expecting something to happen, guys. Okay, so there will be some huge movements on the market after the release of this data, such as the US GDP revisions, US initial jobless claims, and as well as the US durable goods. Okay, so I'm seeing the possibility of that happening. Okay, so that's why there has been quite a volatile market movement, but it hasn't reached our last band of a stop loss price around 2670. So if you guys want to trade on it right now, you guys could have been probably trying to re-enter the trades. So I suggest here re-enter at lower prices. Probably you guys could enter around 2674, 2675. Your losses just below this number. Okay, definitely you guys could have re-entered the trade. Alright, it has been bouncing higher than what I've recommended, so it's pretty much fast. So, but for the silver market, I think I won't be recommending anything, guys. Okay, so we can be focused more on the gold market and put our stop losses just below 2670. Yep, that could have do it. So you guys can enter around this number and try to put your stop losses just tight enough. And I'll be readjusting the price target for now. Okay. So I'll be back with the lessons talking on the US dollar Canadian dollar side. Okay, it seems that the US dollar started to strengthen for a while. So I believe that could have been giving us some momentum. If you guys want to trade on the downside, this will be definitely helping us to find a good entry point. But right now, we haven't seen anything yet. So we couldn't do much about it. So much more the waiting on the sidelines, trying to find an entry point around 1.34742. Okay, guys? All right. Let me check on the US dollar index because it seems that this chart should have been showing us some signs. Okay, so right now we are seeing that US dollar index started to get stronger and managed to rebound before the release of this US GDP news, because I'm not seeing anything surprising on the news side. So we'll be more on the waiting side, see how does it react on the gold later on. Okay. Okay, for now, we are already in a profit, trying to reach our first price target after re-entering the trade. Okay. All right. So if you guys have been watching the live streaming, you can definitely have been trading in and out of gold two times based on our signals. And if you guys are much a more short-term basis, you guys could have been re-enter and in and out for multiple times. Okay. So I will be back for the lessons and I'll be talking on the US dollar Canadian dollar side. And this is one of the speech coming out from the Bank of Canada Governor Tiff Macklem, saying that he's quite pleased that inflation is already back to 2% target, but they want to keep it around 1 to 3%, and they want to see the economy to have a soft landing because they are very happy to see that inflation has been coming back down and has been quite a long journey. And he also reiterated that he wants also to see an economic growth from his side, and it is reasonable to expect more interest rate cut given the progress seen on inflation. Because last week we have already seen that the statistics of Canada reported the CPI was rose just by 2% on a yearly basis, the slowest rate of increase since 2021, and also two others of the BOC's preferred core inflation measure are also easing on average towards 2.35% from 2.55%. And the bank has already forecasted that the economy would expand at 2.8% annualized over the last 3 months, but the preliminary data point has shown to be a weaker pace. So the Bank of Canada started to worry that the economy has already started to weaken. And this some indicators suggesting that growth may not as strong as they expected, as they will be watching closely alongside consumer spending, business hiring, and investment. And this is for the very first time Macklin commented on price pressure hitting the bank's target around the 2% target, as we can see from the first paragraph on the last line. And officials have started to lower interest rates 3 times since June, bring the overnight rate to 4.25%, and signal more interest rates are to come. But economists see mounting weakness in the labor market, and some of them are calling on policymakers to start making bigger moves to bring down borrowing costs. As you guys can see, the yearly inflation rate has been going lower from the Canadian side, going lower right now, as you guys can see. And the growth is not expected. It's going slower right now. It's just around 2.2%, guys. Okay. So there are some concerns because people are expecting around 2.8%. So it is going weaker. So that's a negative sign. And also unemployment started to increase. So that's a worrying sign because economy is not doing well. Okay. Unemployment increasing. And then we can see that the GDP also started to weaken, going lower. And we are seeing inflation is going lower, meaning that there's a possibility that the weakening of the economy has been able to drive down the inflation. And earlier this month, Macklem has also repeated that the officials may cut by 50 basis points or more in one decisions if inflation and the economy is slowing faster than expected. But he also said they could decide to pause cuts if growth is stronger or inflation is persistent. And as a result of these comments, Canada's benchmark 2-year yield dropped below the 10-year or for the very first time in more than 2 years. And falling yields and the disinversions of the yield curve reflected the rapid change in expectations for short-term interest rates in North Canada, since Canada 2-year notes dropped as low as 2.8%, the lowest level since 2002. As a result, there's less of a need for borrowing costs to keep restricting growth, and the yield curve only signals that policy is set to loosen. and it's mostly removing the knife on the throat of the economy. And they will be deciding on another interest rates next month on October 23, where officials will also provide a new batch of economic forecasts. And right now, traders are expecting a odds of 50 basis point at about a coin flip, meaning a 50 to 50% chance for a 50 basis point cut, as markets are expecting rates to fall to 2.5% by July of next year, more than 50 basis point lower than they were pricing a month ago. And as decisive monetary policy actions and unblocking of supply chains, meaning uncertainty about costs and inflations are much lower than 2 years ago. So this is the last comment out of Tiff Macklem saying that costs and inflations are already much lower, meaning they will be having a clear directions about the economy and the overall inflations of the country. And that's a possibility of 50 basis point cuts on the Canada side. Okay. So we will be having a close attention towards it. And if a 50 basis point cuts are coming with a weakening of economy, I'm expecting that US dollar, Canadian dollar could go lower, guys. Okay. So probably that could be one of the main trades of the next few months, guys, because there's a possibility for USD CAD to go lower. As you guys can see, the almost started to these inversions for the 2 year note yield and the 10-year note yield started to go higher and reach a positive signs. So it has already broken off the zero, and right now it's already around 1.52. Okay, all right. So as expected, it could be going lower and lower for the US dollar, Canadian dollar. But before that, I'll be discussing the last 2 points of today's material, which will be coming out from the new home sales, because this news will be just correlate with last night news, coming with the explanations of the possible price increase of homes, because the s- the prices of home has started to going higher at a slower pace, meaning that there's a possibility that the home sales are going lower. And as surprisingly as you guys can see, it has already started to go lower than the previous numbers. So the house are sold just by annualized rate by 716,000, and home sales decreased by 5% after rising at a fastest pace since 2022. Meaning people are waiting for lower interest rates. As you guys can see, home sale prices are down by 4.6% towards 420,000, and that marked the seventh straight month of annual price declines, extending the longest streak since 2009. And that mainly reflected fewer sales of home price above 500,000, meaning there's a very weak purchasing power on the home market. However, despite the decline in sales, sentiment has started to good looking better, where mortgage rates are at the lowest level in the last 2 years. I'll be talking about that later on, and already boosted the morale amongst the home and consumer. Whose outlook for future sales turned positive for this month for the very first time since May, and shares of construction home buildings have been trading near all-time highs. And we also have some details coming up from the builder sides. They have managed to sell off the inventory, with the number of completed homes sold reaching the second highest level since the end of 2006. But in fact, inventory was still quite much and the most bloated since the Great Recession. So this sign is kind of worrying. Even though they are managed to sell the inventory, we are still seeing the possibility of the bloated inventories that people are unable to buy homes despite mortgage rates are going lower. As you guys can see, sales fell in 3 out of 4 regions, even though we are seeing contract signings increase the fastest pace since the end of 2021, which but we are still seeing the overall sales in the 3 regions are down. Inventory was still quite high, still bloated enough, and decline in sales were very much clear for us to see. As you guys can see, that contract signing has been going lower and lower over the last few months. As you guys can see, even though it's increased, it's now going lower. Possibility it could maintain that weaknesses. Okay. And number of home sales for sale has started to decline, but now it's bounced back higher. Okay, showing that a lot of people are waiting for a lower mortgage rates. And this is the last data, and you guys can see that mortgage rates has been going lower by 0.02%, and applications mortgages jumped towards 11%, as a lot of people capitalizing the lower interest rates to refinance since the highest levels in April 2022. And the contract ended 2 basis points lower to 2.6.13%, the eighth straight weekly drop and the longest stretch of decline since 2018-2019 period. And that helped to boost the gross home sale purchase applications by 1.4% last week, the highest level since early February. And that fifth straight weekly advance lead to the gradually finding some footing on the market. At the same time, home financing cost starts to destabilize, meaning that you can see yields on the 10-year Treasury notes have edged higher in the last week as traders debate the magnitude of the Federal Reserve expected interest rate cut in November. And 15-year mortgage also managed to go higher, and also the 5-year mortgage rate go higher after a sharp decline in the prior 2 weeks, meaning that people are reassessing what the Fed rate is going to say. As you guys can see, 13-year note just dropped by 0.02%. Meanwhile, we are seeing from the 10-year note yield, 5-year note yield started to go higher after going down for straight 2 weeks, the last 2 weeks. So we will be waiting for more interest rate decisions out of the market. As you guys can see, a lot of people started to refinance their mortgage to get lower interest rates. As you guys can see, lower interest rates have been started for declining for almost the peak at around the September 2023, and right now it's already around 6%. So that's why people are refinancing their mortgage. Okay, so I believe I've covered almost all of this material for you guys tonight, and let us happen on the gold market. All right, it seems that the news hasn't been that positive. But it do manage to reach our first price target again, guys. Okay. So if you guys do pay attention on it, it has already reached its first price target again. Before right now, it's going lower, reaching our entry price again. So if you guys have already reached around 2,680, you guys should have been able to take some profit of it. Okay, it seems that the market has stabilized, and let us check the news. Okay, so we can see that the revisions are still the same. Nothing has changed. US initial jobless claims even managed to go lower surprisingly, meaning that not a lot of people are claiming for unemployment, which is a very good thing. But from the US durable goods, actual numbers are quite worrying, guys, because it has not been growing, but the forecast is very negative. So that's why it's very positive news coming out from the market, meaning it could lead to a stronger US dollar. So if you guys haven't take profit on this, you guys should have been taking profit from just now. And right now won't be a good time to do a buy, but probably you guys should have been waiting for more good entry points after correcting quite much. We'll be waiting for some consolidations before re-enter the trade later on. Okay. So even the silver prices has started to go down, and I've suggested you guys to take profit around 32.6. Right now it's already 32.23. So if you guys haven't already took profit of it, I must say that you guys are quite fast, but right now still could possess a good cut loss point if you haven't cut the losses, but I've already recommended to take profit from 32.6. So you still manage to get some profits out of it rather than having some losses. Okay, so all of this news is very much positive for the US dollar market, meaning that it could contribute towards a higher US dollar. So right now we are seeing the strengthening of the US dollar index for you guys to have a clear look on it. Okay, so you guys can see as a result, the US dollar index started to rebound with the positive news of the economy of the US side. So that's why we are seeing a very volatile market movement coming out from the gold side as well as on the silver side. Okay, so that will be the end of my live streaming sessions tonight. And I'll be handing over to Jaden, who will be continuing tonight's live stream. So don't worry about that, guys. So I'll be seeing you guys tomorrow. So the schedule will be still the same, around 7 p.m. Singaporean time. If I'm not wrong, it will be around 12 p.m. at UK time for you guys to follow our live streaming sessions daily from Monday to Friday. Okay, so I'll be ending today's live streaming. As usual, if you guys do have any other questions, I'll be waiting for a while. But I've not seen any comments or anyone join the discussions room. So I will be waiting for your comments and discussions in the next sessions. And if you guys want to get more exclusive signals from me and the other live streamers, you can definitely register yourself to get more exclusive signals and trading plans. All right, I'll be seeing you guys tomorrow on the same time. I'll be seeing you guys tomorrow. Bye.
Hello everyone, let's begin our sessions and let's recap what we have been doing last night. Okay, so we have been doing shots, everyone. So if you still remember, we have been doing shots on the crude oil. So if you still remember, we already mentioned that crude oil is possible and high probability that it's going lower. Why? We can see that this is the manipulations and this is a strong displacement break of structure. Okay, so once the prop structure has been break, we have quite high confidence that the price is going lower. So this is the evidence that we have been doing shots. So you can see that we have been doing shots from here to here. So you can see this is a really great setup and we are definitely thinking that it's going probably going much more lower if you still remember. Why? Because this is the daily internal range and where is it going to? It's going through the external range. So we are estimate that the price is probably going on the external range. Okay, so because we are much more conservative on this one, so we just take partial of it. Okay, so exactly what is really going on. So right now, what is going on the crude oil? Oil has been reflecting on this fair value gap. So you can see the fair value gap has been reflecting on. So this is the daily fair value gap. So we'll be using this 1 hour time frame to determine that where is the price is going on. We need to have some kind of displacement on the lower sides. So right now what we can see, it's likely to see that price is going through this fair value gap. Is it going to? Yeah, it is. This is the fair value gap that the price has been reaching through. Quite good. Is it a displacement? Is it a displacement in a smaller time frame? Let's see. Is it a strong displacement? You can see that it's not a really strong displacement, to be honest. So I'm thinking that we are likely to see the price to continue going on the higher stage. So I'm likely to see that the price is reaching through this area, this 50% area. So as you can see, this is the manipulations, displacement, rebalancing out. So this is a supporting area. Okay, so going back on the 5 minutes, I mean, this is the daily time frame. The daily time frame, let's see. Uh, this is the fair value gap has been forming up for 1 hour time frame, giving up displacement, reflecting on this one. So we are likely to see the prices going higher. I'm not really confident to do shorts right now. If you wanted to talk much more details about it, I'm rather to do long right now because we can see that the price has been reflecting on rejections and this is grabbing liquidity. A lot of people will be thinking to do shorts. Once the price has been reflecting on here, we are definitely looking the price is going higher. Going back to the 5 minutes, we also can see that the price has been forming this grabbing this liquidations. So you can see that this liquidations has been grabbing on. Once the price has been grabbing on this liquidations, you can see price has been break of structure. So what we can likely to see, the price will be likely to go higher and reaching through this. So right now, I'm definitely thinking to do long rather than do shorts, to be honest. So we'll be looking to price reaching through this, waiting for rebalancing out, and then continue going higher and reaching through this area. Okay, so I'm definitely thinking to do long, waiting for the price to rejections. So if you all want to do a shorter time frame, a short term, you can try to do long. If you want to do a long-term trade, for example, you want to take from here to under range from here, then you can try to wait for another short opportunity. But right now, I'm thinking that the price is going higher, to be honest, because even though that the price has been giving up some kind of displacement, but I'm thinking that this area has been reflecting on the daily time frame. So right now I'm thinking it's probably going a retracement. So yeah, going higher and reaching back to this level. Okay, so let's go on. What is really going on the dollar index? If you still remember, we already mentioned that the dollar index is going higher. So you can see the price has been reacting from what we have been talking about, this supporting area. So why is this supporting area? Because this is the 50% area. And yeah, wait a moment. Okay, just cut it out. 50%, is it true? Okay, yep. This is the 50% area and the price has been reaching through this fair value gap. It's likely to continue going higher. So down in the gold market, later on I'll be talking about the gold market. The gold market, I'm thinking we need to have a 4 hour time frame to see is it the price staying below, because this is the liquidity grab on the 4 hour time frame. If the price do really stay below, we can expectations that the price is going back to this level and reaching back to the 50-minute time frame. We need to see a strong displacement below, breaking through here. Once the price has been breaking through here, we will be having a really strong confirmations that the gold market is going on the low sides. So this is a really important thing that you need to be aware of. So you can see this is the supporting area. Okay, so let's talk about what the comment sections. Okay, hello teacher, hi everyone. Teacher, look at the goal. Can I place a buy order right now? The 78 I had in front of me has been cancelled. Can I continue open long right now? Okay, it's quite interesting if you say that. My order 72 still there. Okay, the position I just entered was not very good, so I was planning to reopen. Friends would like to listen to teacher live lessons. Okay, I just placed a buy order at 69 after falling a bit at the current market frustrations are a bit slow. Is this drop to a support? Okay, so let's talk about few of the factors first. Okay, so what is the behind of the reasons that the gold market is going lower? One of the biggest reasons is that the data has been announcing. So the most important data that has been announcing is the GDP staying remaining unchanged, and another will be the core GDP. I mean core durable goods order, and also the unemployment claims. Those data is showing a red flag. I mean a green light. So what does it mean by that? Green light means that it is higher than expectations, the spending power is remaining strong, and this will be forming some kind of support from the dollar index. So dollar index, our expectation is that the price is reaching through this and this external, and we are likely to see that the price will be going back to this area. Okay, so this is the area that we are expectations that the price will be going to, and then once the price has been going to, we are likely to see that it's going on the higher sides. So I'm thinking that it's possible that the dollar index will be reaching higher and reaching back towards this area. So because of the dollar index going higher, this might be likely to give some kind of declining on the gold market, to be honest. So I won't be giving much information about right now. I'm rather to wait for the candlestick to close, waiting for the 4 hour time frame to close. If the 4 hour time frame close below, I'm thinking to do shorts. If the 4 hour time frame candlestick is staying above, then I'm likely to continue to do long. So right now is 15. So I'm thinking we need to have another hour. So it's about 50 minutes or another 50 minutes. So if this candlestick is staying below, then I'm thinking that it's doing shorts. If this candlestick is staying above, then the price is likely to continue going on a higher pace. But I'm likely to see the price is going lower, to be honest. But let's see how the price turns out. Okay, I need to have some confirmations right now, because right now the price is reaching through a certain supporting area. If the price do really continue going higher, it's likely to reaching back towards this area. But as I already mentioned, this today this week we can see that this is the accumulations as I always say, we need to know how does the candlestick form. Okay, candlestick perform is like this and this. Okay, so where is this area? Okay, this is the opening price. So this is the opening price, and this is the this area. Okay, so once the price has been forming this area, you can see that the price has been reaching high, and this is the distributions. Usually, distributions will be having some kind of declining stations. Maybe you can say decline, or maybe you can say retrenchment. So I'm likely to see something like this. Maybe the price will be reaching back towards this area. Maybe, but we need to see the 4 hour time frame. Is it possible that the price is staying below from this area? If that really happens, we are likely to see that the price is reaching on the lower sides. Oh shit. Okay, we are likely to see the price still reaching through the lower sides. So later on, I will be talking about a deep analysis on the gold market, but right now I'll be talking about what is going on and also the same, what is going on and what we can do about it. Okay, so this is a clean chart, so we'll be canceling out everything and we'll be talking about what our thoughts about it. We need to have a bias. Okay, weekly bias. What's your weekly bias? Weekly bias is determined that what is your directions of the week. Do you think that the goal is going higher, or you think that the goal is going lower? Okay, this is the bias of the week. Once you have the bias of the week, then you need to aligning with the daily. Okay, you need to align with the daily. For example, this is Thursday, Wednesday, Tuesday and Monday. So if the price do really forming that and continue going above, so we can see that we will be doing long positions on the lower side. So exactly we need to aligning with the bigger time frame. So what's your daily bias? Oh, what's your weekly bias first? Okay, this is really important. So how to determine bias? It's reflecting on the liquidity area. So you need to know that the price usually will be going liquidity to another liquidity. So there's two types of liquidity. There's internal liquidity and also the external one. Okay, usually the price will be going external back to the internal and internal back going back to the external. So you need to understand the bigger time frame. What's the bias behind on it? Once you have a bias, you can try to form a strategy behind of it. So this is really important. But to be honest, I don't really like trading gold recently. One of the reasons is that gold gold is really huge volatility to be honest, but sometimes it didn't really give us if the price do really give some confirmations. The price usually won't be giving some kind of retest. So after that, I will be talking much more about it. So let's talk. Let's see what's the comment sections below. Okay, gold is rising, get it right. Fortunately, it will definitely not fall forever. I've just entered the market at 71 and made more than 100 US dollar with quantity of zero point 0.2. If it continue to rise back to 80, be very happy. Okay. Yep. If the price do really reach back to 80, I'm thinking that it's probably a good thing. The corrections and decline just now were due to the fluctuation in the data. After all, data is bearish. Gold V reversal really caught everyone off guard. Okay, so one of the major reasons that the data will be giving some kind of manipulations. So let's see the manipulations. I rather wanted to see that the price is breaking through this low. So let's see, where is the liquidity that the price is going to grab on? Is it the 4 hour? Or is it the daily? If it's the daily, if it's the daily liquidity area, then we are likely to see the price going lower than this area and then grabbing below. So you can see going grabbing below. So going back using this, is it 50%? Yes, it is 50%. So this is the area that likely to reach on the fair value gap. You can see that. Okay, so once the price has been reaching through, going back from the 5 minutes, it's really hard to do, to be honest. So, for example, a daily time frame, we know that the price has been reaching through this external daily time frame. So, what we likely to see is that the price will be retrenchment back in the grabbing on the lower liquidity, so we'll be here. So this is 1 hour time frame liquidity area. Once the price has been reaching through, we are likely to see that the price is really reaching through here. If the price do really stay above lah, okay, so the price will be reaching here. Okay, once the price has been reaching here, going back to the 5 minute charts, will be the price will be reaching here. So right now, I'm thinking that the price is going higher, to be honest, but let's see. We need to see that price reaching through this liquidations from here. Okay, from here, from this area. Okay, because this is the manipulations. Okay, manipulations from the low. Okay, manipulations from the low and grabbing this liquidity. And once you can say that it's this area should be more accurate. uh yeah, grabbing this liquidations. Once the price has been grabbing this liquidations going back, then it's likely to continue going higher. So I'm thinking that once the price has been breakout structure from here, we can exactly just try to do long from this area if the price do really give us an opportunity about it. This is the quite a good place to try to do long, but yeah, okay, because this is a 5 minutes reaching back, going lower, and then if we do long in this area, putting your stop loss 50 pips. Yeah, it's a bit far to be honest, but this is a 50 pips, and then you can get around 1 to 2, 1 to 2 should be fine. So waiting for the price to react and see how it happens. It seems like the price is going higher, so we are probably just doing long on the 5 minutes because this is the ranging of the 1 hour area. So using 5 minutes to grab 1 hour liquidity area. Okay, so let's see how it happens. Okay, go the number of people filing for unemployment benefits in the United States in the week ending in September 21 was 218,000, a new low since the week of the May of 18. So it will still continue going up. Gold has been came back up. Ha ha ha. Very nice. Now I have 80 points of profits to TP. I wanted to see if I break through new high. I hope it can reach through new high. My orders of 69 is still being hurt. Okay. So right now it seems like the price is going retracement. Okay, 50 minutes manipulations, displacement. But I'm thinking we'll be waiting for another 4 minutes and see what is really going on. Okay, but um, one of the one of the frustration thing is that I'm thinking that the dollar index is going higher. So if the dollar index is going higher, then do we need to think that the gold is going lower or going higher? But let's see how it happens. Just follow the technical and let the technical speak it itself. Okay. In trading, we need to be observer and continue to see the price continue changing and changing. So we need to have a really keen directions about it. Okay, so another 3 minutes left and see how it happens. Okay, if the price do really reach back, then we are basically just thinking that the price is continue going on the higher sides. Okay, I hope it can reach through a new high. Okay, another 2 minutes left and see what is going on. Okay, another 2 minutes left and see what is really going on. Thinking that this is a really good one because this is manipulations and displacement, but and also rejections on this fair value gap. So if that really happens, we actually just can try to do long this. Maybe we can put our stop loss 80 pips and then getting here. Okay, this is actually a good one. So let's see. We another 1 minute left. I think it's less likely that the price is staying below, to be honest. So I'm thinking that we'll be continue to do long positions. Okay, we'll be continue to do long positions, everyone. Okay, so let's see how does the price react. Okay, the price from this point onwards, I'm thinking that the price might be continue going more low than here because this is not a break of structure, so I will be much more conservative about it. So I don't think I will be doing long in here. I think we'll be doing long in a much more lower pace. So yeah, but let's thinking that the price might be breaking through this level and reaching through here. And then after that, price is going low. Okay, so right now what we can see, the price is reaching true high. It didn't really going back from this low. So because of that, we will be continue doing long positions right now. Okay, the problem is where and how. Okay, where and how. You made another 100 points of profit. You really made a lot today. This week is all about looking low and long, low and high, is it? You find the right entry point, the profits will not be too bad. Okay, thinking that this is the order block, price has been reacting there. I'm thinking that the price is going lower. We have a chance to do long positions, everyone. We do have a chance. The problem is, how do we do it? Okay, so yeah, I'm thinking that the price might be going much more lower than this, reaching back to this level. So let's see the price reaching back, grabbing this liquidations, and then continue going higher. So let's do a long positions in a lower states. So what's our bias? Our bias is from the daily time frame. The price has been grabbing liquidations from the 1 hour time frame, grabbing below here, and then has been reflecting on the price going higher. So because this is the 1 hour fair value gap, so we'll be using a 5 minute charts, and you can see that the price has been giving us a displacement and disrespecting on this one. So we actually just can try to do long. If you're lazy about it, you can just immediately just do long in here, putting a stop loss from here. If you want to be better entry, I think we can wait for a price uh going much more lower. I'm thinking that it's likely to go much more lower because going much more lower. I'm thinking that it's likely to go much more lower because we didn't have. Okay, what is happening? Okay, what what is happening? I'm thinking, is it my line? Okay. So this area, I'm thinking that's likely to going much more lower, to be honest. So let's see, the price is going here. See, it seems like because the price didn't break of structure from here, so I'm probably thinking that the price is going lower. So we can exactly just use a 68, 61.8. I'm thinking that we actually can just do long in this area. Okay. Yeah, I think we can just do long in this area. Oh, what is going on? We enter long. Okay, seems like something problem about it. Let's close it and open again. Okay, it seems like have some. I think it's the MT5 problem. Okay, wait a moment, everyone. Is it the MT5 problem? So, okay, luckily we didn't enter our long positions. Do we enter? No. Yup. Replying here. I think we can do a long positions. Is going on? Okay, we can do a long positions right here and putting our stop loss below. Just try to make a low risk entry. I mean, and let's put it back to this, reaching back to this high, or maybe this high if you wanted to, but we can make it. Yeah, let's make it here. Okay, price has been reflecting on, but the price didn't really reach it through, so we can try to make it a low risk trade. Grabbing here and expecting that the price is reaching back towards this area. So yeah, see, this is a strong supporting line and also a fair value gap area. Okay, a fair value gap area from here. So we are likely to see some kind of support from here and reaching through this equal high. So you can see the price has been reflecting on and we are expecting that the price is going higher. Is it possible to go through here? Yes, it is, but our R&R, I think 3 to 1 should be fine. Okay, I think we can make it here. If you wanted to, I think we can much higher than here. Okay, much higher than here because this is the manipulations and also the 1 hour time frame here. But the bad thing is that the price didn't really breaking through here, so mostly will be grab and destroy. So we'll be going on the lower sides. And then once the lower sides have been grabbing on, then it's likely to go back to this area as well. Okay, so as I've already mentioned, this area should be usually breaking because the price didn't breaking structure. So once the price didn't break of structure, be going lower sides and then grabbing back towards upwards liquidity area. Okay, so we are expecting that the price will be reaching through here. I think even much more higher. It's possible that the price is going back to the higher pace from here. But to be safe, I think that this is a quite safe because this is the equal highs. So this might be the low, okay, external to internal, and then internal to the external range. Okay, so let's see how it happens. Uh, yeah, if we really wanted to, we might can wait for the price to break a structure, then waiting for another retracement. This will be much more safe, to be honest. So this trade is actually a low, I mean, a risk much more higher, but the risk reward ratio is much more better because we can see that this is some kind of support, and we are already mentioned that this is the daily liquidity area and the price has been reacting back, grabbing above, and also from the 4 hour time frame it's also closing above as well. So I'm thinking that it's possible it's going higher, but let's see how it happens. Okay, on the 5 minute charts, so if the price do really reject, I think it's okay. But if the price do really go up, we have a really good R&R. I think let's see what's our R&R. Our R&R is from here to here, it's around 30 pips, and we are getting around 3 to 1. But let's see how it happens. So this is a strong supporting level. A lot of people might be doing doing shots right now. Maybe is it possible? Okay, But if the price do really reacting on and going back, I'm thinking that it's possible to break off tree, break off here, grab liquidity, and after that the price is going higher. Okay, gold has now fluctuated in a range. It doesn't give me a new high. It will fall again. What? I know that as long as you have a long order, the profits will be good. That's right. The I mean yesterday has made a huge profit today. If you dare to hold position overnight, you are really powerful. Okay, so let's see how it happens. So if the price do really break through here, then we are wrong. Okay, then the price is definitely going lower. But because this is 4 hour time frame has been grabbing above liquidation, so there's a possibility that will be whole and reaching through lower states and then going higher. So because of that, the daily time frame, okay, and then the 1 hour time frame. So let's see how it happens from the 5 minute charts. Okay. So if the price do hold, I'm thinking it's a really good trade and will be going on the higher states and break of structure. But if not, we will be admitting that we are lost. Our first loss. Let's see. Hopefully that the price is going higher. But as you already mentioned, I'm thinking that the dollar index is going higher as well. So this is not a really good thing, to be honest. So let's see. Okay, it seems like not really good. I think probably we'll be hitting our SL soon. Yeah. Yep. I think just hit our SL. Yep. Probably hit our SLs. Price has been yep, has been hitting our SL. So too bad. But it's okay because we are thinking that the price is reaching back towards upwards. So if not, let's see what is really going on. Hmm. Yeah. Seems like the price is going on the lower sides, grabbing our liquidations and continue going lower. The goal is a bit hard to control, to be honest. Yep. Okay, we have been taking a loss today and likely to reach on the lower sides. Liquidity area reaching much more lower. See, it's a bit hard to trade to be honest because we don't have any information right now from what we can see. Maybe this is the graph of liquidity from the daily time frame, the 4 hour time frame. Hmm, 1 hour time frame. Hmm. Seems like the price is going lower. It's crude oil going lower. Yep, crude oil it's also going lower. I was thinking to do. Oh shit. Maybe we are wrong about it. The price reacting from here, displacement rebalancing out from this 50% order block. Yeah, we might be wrong about this one. Yep. Price reacting from here, from the 5 minutes. If we do shots from this area, putting stop loss above, getting below. Hmm, what's the problem? Huh? Okay, so let's go back to our charts. Okay, later on, we'll be doing a deep analysis about it. I think let's do a deep analysis right now. Okay, so let's do a deep analysis right now. Okay, so we need to have a bias about it. So the bad thing about gold right now is that we don't so sure where is the liquidity is going on. Maybe we can use this this area as our reference, reaching through and going to standard deviations, reaching back towards this area, maybe on a 4 hour time frame. Hmm, market maker buy model, ranging area. Yep, going back to the 50 minutes. Didn't expecting that the price is really strong on the downtrend momentum. This one is really hard to trade, to be honest. The price didn't get the fair value gap and continue on the lower sides. Maybe I might avoiding trading gold. Okay, so let's do a deep analysis right now. Okay, so let's do a deep analysis right now. So let's talk about on the weekly time frame. So from the weekly time frame, we can see that once the price has been reaching through this external range, the price it's going through a ranging area. Okay, a ranging area, and once the price has been grabbing these liquidations, that means that it's not there's no any reasons that the price will be continue on the lower sides. So we can see that once the price has been reaching here, okay, grabbing liquidity, and the price will be reaching through where the internal range, okay, the internal range to the external range, okay, should be here. Once the price has been reaching through this external range, what we can expect, the price will be going back to the lower sides. So the ranging area probably will be around, many people will be using fair value gap, but the price didn't break through this level. So we usually will be using this order block. So you can see that the order block is this area, the down move before up move. We'll be using this as our reference. Okay, so you can see that the price has been reaching through this 50%. Is it? Yep, it is. So this is our point of interest. So we can see that this is our point of interest. Once the price has been going through point of interest to the internal range, so we can see we can use a 4 hour time frame to be trading on. Okay, we need to have confirmations. Yep, we need to have confirmations. So you can see that the price has been break of structure, manipulation, displacement, break of structure, and where we can do shots on, we can do shots on here, 68, 61.8 if you wanted to. If you don't wanted to, I think we can try to do shots from here, okay, using just 50%. Okay, this is our point of interest. You can also use it as well. Point of interest, doing shots from here. We actually can just do shots from here. Okay. And then once the price has been reacting on, okay, break of structure again. So we have two break of structure, one and two. So once the price has been react, we can try to do shots from here. Okay. And where we can get it, we can get quite low. Usually will be this area as our first entry, first TP area. So this is the TP area that we can looking on. Okay, first TP area and the second and third. Once the price has been reaching through, then we can try to use 4 hour time frame because this is the weekly time frame. So we need to have a break of structure, then we can try to do long positions afterwards. But it didn't really give some kind of retracement afterwards. So you can see that the price is continue going higher and higher. Okay, you know what I mean. Okay, so the price reaching through this external range to the internal and internal to the external back to the internal sites. So once the price has been reacting from here, we can expectations that the price will be, because this is the break of structure, okay, break of structure, so where we can expect it on will be this area, so the weekly time frame area. So once the price has been reacting on, and then the prices continue going higher and higher. So because we don't have anything to see right now from here, so we can't do anything from this point onwards. So after that, we can see that the price has been reaching through this area. You also can say that this is the weekly week I mean weekly what I mean weekly liquidity area. Okay, once the price has been reaching through this weekly liquidity area, where is it? Okay, weekly liquidity area, we can expectations that the price is going lower and reaching where? We'll be reaching through a deep retracement, should be around maybe lower than here. So once the price is reaching through and then grabbing liquidations, but then continue going higher, it's still the same. Once the price has been going higher, what we can expect, the price will be going a retrenchment and then continue going retrenchment, continue going higher. So right now the problem is we don't have any deep retrenchment. I'm expecting that we'll be having right away, because as we already mentioned that the dollar index is continue going higher. So this is the monthly. So you see that this is the manipulations, distributions. So we are likely to see some kind of, I mean, some kind of closing below a bit, to be honest. So yeah, we'll be expecting that the price is closing below, maybe reaching here as our area. Yep, grabbing liquidity, thinking that this might be the daily liquidity area. So yeah, using 1 hour time frame, we need some confirmations. If that really happens, I think it's likely to continue lower. So let's see the comment sections below. Okay, so let's talk about some of the things that we prepare on the PPT, and later on let's continue on the charts. Okay, okay. What is really going on from my computer? Okay, wait a moment. I'm thinking that my mouse have a problem. Okay, okay, okay. Not so. Wait a moment. Okay, so we can see back our mouse again. Okay, I might be having some. Okay, so let's talk about the news. Biggest news today is that the Swiss National Bank has been lowering down on SNB policy rates by 0.25 basis point to 1%. So one of the biggest reasons that uh, the inflations has been going lower and the economic situation is not really going well, so they have been continue lowering down their interest rates decisions, and this has been will be forming some kind of support on the Switzerland economic situations. So this is what is really going on. Okay, so the Swiss National Bank is lowering down to 25 basis point to 1%. And the inflationary pressure in Switzerland has again decreasing significantly compared to the previous quarter. So from what we can see right now is that the inflation rate has been dropping to a new low, and this is also one of the reasons why that they have been cutting rates. Okay, among other things, this decrease has been reflecting on the appreciations of the Swiss franc over the last 3 months. Okay, so we can see that this decrease also reflecting on appreciations of Swiss franc over the last 3 months. Okay, so you can see that the market has been buying in and expectations that the Swiss franc, the Switzerland will be continuing lower interest rates. Therefore, the Swiss franc has been continue going on the lower sides. Okay, the SNB easing of the monetary policy today has been takes the reductions of the inflationary pressure into counter. So this is quite straightforward because they do lowering down the monetary policy. One of the major reasons is that they're taking account of the inflation pressure. Okay, and also they are planning to further cut in the policy rates, and if become necessary in the coming quarter to assure price stability over the medium terms. So from the longer time frame, we can expect that the Swiss franc might be continue going on the lower sides. Franc might be continue going on the lower sides. Inflations in the period since the last monetary policy assessment was lower than expectations. So you can see that the inflations is lower than expectations. Okay, you can see that overall the inflation rate is lower. Okay, standing at 1.1% in August, comparing on the 1.4% in May. Okay, imported goods and services in particularly contributing to the declining. So the importing goods, the service industry has been the biggest contribution behind it. Overall, the inflations in Switzerland is currently being driven down mainly by higher price of the domestic services. Okay, so overall, the inflations in Switzerland is currently being driven down uh, mainly by the higher. Okay, so currently the inflations of Switzerland is being driven by mainly on higher price of domestic services. So services is one of the major supporting from the inflations. Okay, the new conditions inflation forecast is significantly lower than June. So there are expectations that the June inflation rate will be much more lower. Okay, one of the bigger reasons is that the lower oil price and electricity price cuts announcing for the next January, and also other than that, okay, it puts average annual inflations at a 1.2% for 2024 and 0.6% on 2025 and 0.7% in 2026. So it's lower than 2% that kind of period. So we can expectations that the inflations will be continued on the lower sides, and this will be putting a lot of pressure on the Swiss franc. Okay. So from this PPT, what we can see is that the forecast. Okay, you can see the forecast. June 2021 is right now. So this is the forecast on September. It's much more lower. Okay, so they forecast that the inflation rate is much more lower to 1%. Previously, it's 1.25%. So because of that, we can expect that Switzerland will be continue cutting rates in the near future, and this will be putting pressure on the Swiss franc. Okay, so from what we can see, the Swiss franc has been maintaining on the lower sides compared to the commodity currencies such as the UD pairings, New Zealand pairings, and also the CND pairings as well. So going back to the charts, okay, going back to the charts and see what is going on. Okay, shit. Okay. Okay, the price has been going lower, reaching on the lower sides, but didn't really break of structure, to be honest. Okay, break of structure, liquidity grab, 5 minute. Whoa, this drop, I think that it's going on the lower side. I may be reaching through here because this is the liquidations on the lower side. But the bad thing is that we don't really have some confirmations behind of it, so we might be trying to trade above external to internal range, 50%. Okay, interesting. So let's do. I think one of the biggest reasons is that the dollar index is going higher. So dollar index is going higher, then probably will be giving some kind of supporting line. Okay, OPEC will be continue to increasing. Let's wait. Wow, you guys are fast. It's rising now. 50 points. Got again. Ha ha ha. There's still opportunities, ups and downs. This time it will be even better if I could continue from 61 to 80. OPEC Plus will continue to increasing productions. Oil price have fallen sharply, and we can no continue go long in crude oil for the time being. Okay, so yeah, so it seems like the crude oil has been continue going lower. As I already mentioned, the crude oil is probably is going lower. So yesterday, if you do listen to our trades, I think we can earn quite a lot. Okay, so this is the area. The price has been reaching through, breaking structure. Oh, this is actually another good place to do shots and grabbing on the lower sides. External to internal and then going on the lower sides. Okay, seems like the price of gold market is also reaching through. Let's see how it happens later on. Okay, so let's look through the Swiss franc. Okay, let's look on Swiss franc. USD CHF. Okay, let's look through USD CHF together and let's see what is happening. Okay, so USD CHF, let's look at the bigger time frame and let's see what is going on. Okay, so from the bigger time frame, what we can see on the Swiss franc. Okay, so from the bigger time frame, we can see that the price has been reacting, but didn't really break of structure. So um, likely to see the price reaching through this area, to be honest. So this is the structure made going on the lower sides, grabbing this liquidity external to internal range. So the price do really go back to the internal range, but didn't really go back to the fair value gap area. So you can see that the price didn't really go through the fair value gap area. Yeah, it didn't really go through the fair value gap area. Once the price has been react going lower, reaching back on the lower side. So we are basically thinking that it's likely to reach on the lower side. Okay, it's likely to reach on this. So you can see that the price has been react going lower. Hopefully, I'm thinking hopefully is that we will be waiting for the price to go back to this area because this is the fair value gap area and the price do really reach through the bottom line. Okay, so if that really happens, we can wait for the price to reach through this and we can do shorts. This is our point of interest from the bigger time frame. Okay, bigger time frame, and what we can see from here is that the price has been grabbing liquidations, liquidations here, but didn't really show any strong upwards momentum. So I'm thinking that it's possible is that the price will be reaching back towards this area. So maybe the price grabbing liquidations, falling back. So yeah, I will be probably doing long. So you can see that the price has been forming here as a supporting level. Okay, so you can see that the price has been forming some kind of supporting level from here. So shit, what? Okay, little bit confusing. Okay, but let's do from here. From what we see, so price has been forming that and see it going on. Okay, if the position is entered well, it will be profitable. There should be no data messages later, right? Yes, there is no any data right after that. We are expected that the price is reaching on the higher place and will be grabbing these liquidations. So taking too long is probably a better way from what we can see right now. Okay, ooh, 50-minute time frame. Is this a fair bit of gap? Yes, but the price don't really go through that area. Gold is really not a good item to trade, but we are expected that the price is breaking through here, possible breaking through here because dollar index is going higher. Okay, dollar index is probably going higher. Okay, dollar index is going higher. So let's see on the other pairings. Let's go through the silver markets together. Okay, so let's go through the silver markets. Uh, Okay, silver markets. We need to know that what is really going on. Okay, we can see that the price has been going up, and then have been grabbing on and then grabbing certain liquidity area was expected here, but usually we can use this 50 basis point. Okay, the price usually will be going below 50 basis point. Okay, and and we can expect that the price is reaching through this area, this area. Oh, and the price didn't reaching through this fair value gap. It's okay. Um, Reaching through on the lower sides. And then the price has been going higher, grabbing liquidations and continue going higher afterwards. So what we can see is that the price has been reaching through these liquidations and it likely to continue on the lower sides and going back to this fair value gap. So once the price has been reaching through this fair value gap area, we'll be using 4-hour time frame. So you can see that the 4-hour time frame, the price has been reacting from that break of structure and then likely to go back to this area. Then once the price has been going back, we are likely to see what? We are likely to see a big retracement afterwards. Maybe you can see that this is a daily order block from here. So we can try to use 1 hour time frame, 1 hour time frame to do shots. So from here, you can see that the price has been going on the lower sides and basically we'll be reaching through the 4-hour time frame or maybe the daily time frame of the order block. So you can see the price has been reaching through this daily order block. Yep. Once the price has been reaching through the daily order block, we'll be using 1 hour time frame to see to continue going higher. Okay, from where is it? Okay, it's here. Okay, so once the price has been reaching through here, you can see that the price didn't really break through here. So usually we'll be having some kind of big retracement. So once the price has been forming another supporting line going back, and we will be continue going on the higher place and has been continued going higher. So right now, what we can see, the silver market has been reaching through almost to a new high and has been grabbing liquidations from where is it? Let's see, where is it? Is it a 4-hour liquidity area or maybe a 1 hour liquidity area? So what we can see is a 4-hour liquidity area has been formed and where we can expect price will be reaching through this liquidity on the lower sides. Okay, okay, going back, we will be using 50 minutes. So let's see, is it okay? We can see that the price has been breaking structure going on the lower sides, and there is it. We can see that this might be the manipulations. So you can see this is our what fair value gap area. Even though that didn't reach, but you know what I mean about it. Okay, so you can see the price do really reacting from here and then reaching back towards on the lower sides. Okay, reaching on the lower sides. I'm thinking that it's possible, it's probably will be go continue on the lower. So you can see right now it has been reaching on. So we can try to do shots. Shit. Okay. We can try to do shots from here because the price is going on a rebalancing phase, probably on a 50% above. Maybe here is our entry level. And this is our entry level. Our stop loss maybe put above and we can get much more lower. Is it 50% right here? Yeah. It's basically it's going lower to be honest. We'll be continue going on and much more lower. Okay. Okay. So let's see how it turns out. Wednesday high. Okay, so as we already mentioned, this is the hmm. Yeah, I'm thinking that it's possible going lower and reaching through this level, the internal level. Once the price has been reaching through this internal level, possible going back to the lower sides, grabbing these liquidations and continue going lower. Yeah, we actually can just do shots from here, to be honest. So let's see this area. I think we can just try to do shots from this point onwards. Wait for the price to grab this liquidations. Once this liquidations has been grabbed, I think we can try to do shots. Probably the price is going lower and lower, everyone. Okay. Okay, so answering some of the questions, if the position is ended well, it will be profitable. Okay, there's okay. After today trading, I now more than 200 points in profits. It's very cool to trade following the teacher's signals. If you can make profits of 200 points every day, then your trading is indeed great. I also added their channel. Okay, I mean follow our channel if not mistaken. So okay, I'm thinking let's yeah, I think that it's going on the lower sides. Okay, the price of gold will be much more sides. Yeah, I think that it's going on the lower sides. Okay, the price of gold will be much more sides. Yeah, I think that it's going on the lower sides. Okay, the price of gold will be much more sides. Okay, so it's likely to go to the lower sides and reaching through this liquidations and liquidations as well. Okay, so we are likely to see the price is going on the lower sides and reaching through this area. So this is the external to the internal. So the price has been reaching through the liquidations. So once the price has been grabbing this liquidations, okay, we can expect it's likely to go to the lower sides and reaching through this liquidations, liquidations and liquidations. So we are likely to continue doing shots. So the price will likely to see the price is going on the lower sides and reaching through this area. So this is the external to the internal. So the price has been reaching through the liquidations. Okay, so let's so once the price has been grabbing this liquidation, we can expect so let's price to the lower side and reaching through the liquidations, liquidations and liquidations. So we are likely to another trade. So the price will likely to see the price is going on the lower side. So price has been oh, this is a really great one. To the internal, we can see the price has been reaching through the liquidation. We can see that the price has been reaching through the liquidation together. Once the price is grabbing this price to the lower side, and actually just regular price is going well. So we are likely to another here. We can see that gold is the price is going back. We can see that so price has been this is really great one. To the internal, we can see the price has been reaching through the liquidation. We can see that the price has been reaching through the liquidation together
Okay,
here.
once
So
price
let's
is
flag
flagging
this
price
to the
is
lower side from
mostly
here.
actually
How
just
the
structure
price is
lower
heading
side
as well.
structure
And
and
if we look at the
accumulating
chart here, we
the
can see
price
that
is
this is
going
the
on
it's
and
actually going back.
going
You
back.
can see that.
The
So,
price has been
and this is the
actually
area that we
flexing.
see
So
what we
what's
can
your
see from
price
here.
see?
Oh, this is the
Yeah, we
weekly
can
chart.
see that the
So
price
let's
has
once
been
again
actually
trade
flagging
here.
once
So
price is
probably
flag
when
this
we see
price
the
is
lower side from
mostly
here,
actually
how
just
the
structure
price is
lower
heading
side
right now.
structure
And if we
and
look at the
accumulating
chart here, we
the
can see that
price
this is
going
the
up
it's
and
going
going
back.
back.
You can see that.
The
So,
price has
and
been
this is the
actually
area that we
flexing.
see
So
what we can see from here.
it's probably
This is
going
the
yeah,
weekly
we can
chart.
see that the
So
price
let's
has
once
been
again
actually
trade
flexing
here.
once
So
price is
probably when we
flagging
see
price
the lower
is
side from
mostly
here,
actually
how
just
the
structure
lower
lower
side
side
right now.
structure
And
and
it seems
accumulating
like we can see
the
that
price
this is
going
the
up
it's
and
going
going
back.
back.
You can see that.
The
So
price has
and
been
this is the
actually
area that we
flexing.
see what we can see
Yeah,
from here.
it's probably
This is the
yeah, we
weekly
can
chart.
see that the
So
price
let's
has
once
been
again
actually
trade
flexing
here.
once
So
price
Yep, the gold market has been reaching through on the lower sides. So where is it going on? Probably here or maybe even here. The gold market is a bit fast to be honest, so it's hard to grab on. So probably the price has been reaching on the lower sides and continue going on the lower. So it seems like this is the highest of the week. Okay, so this is highest of the week. Once the price has been breaking through, I'm thinking that Wednesday. I mean, oh sorry, today is Thursday, right? Okay, I was not thinking that today is Wednesday. Okay, so it's probably is reaching through the highest Thursday, Wednesday, Tuesday, and Monday. It's not really likely will be breaking through here. So this is the lowest of the week. Maybe you can say this. So probably will be reaching below and reaching back to 2643. Okay, 2643, everyone. 2643 will be reaching back and going on the lower sides. Seems like dollar index is continue going on the higher phase, reaching through and continue going on the here and here as well. So once the dollar index is going higher, then it's exactly putting pressure on the gold market, the silver markets. So you can see that we are planning to do shots from here. We actually can do shots from here, but yeah, once the price has been reacting from here, you can just do shots. Oh, strong downtrend momentum. Okay, we have another 8 minutes left. If you have any questions, please do ask. But now I'll be talking about some of what I've been learning from what I've learned before from the SMC. Okay, so mostly you need to know that the market is going liquidity to another liquidity. So based on your liquidity area, where is the liquidity area that it's likely to reach on the weekly? Okay, so for example, I'm thinking that the gold market will be reaching because there's no any this is the highest point of the of history high, so we can't really think about where is it. But if you wanted to, we actually can try to make it here, standard deviations. Okay, standard deviations, and where is it? Nice, standard deviations 3. So you can see that the price has been reaching through the standard deviation tree. And once the price has been going on, then you can see that the price is likely to reach where? They're likely to reach on the lower sides. Okay. what do I feel that the product products are on a downward trend because dollar index is going higher. Everyone, I literally have been telling you guys that the dollar index has been continue going higher and higher, and will be reaching through 10750. So this will be putting a lot of pressure on the gold market. Gold market will be probably on the lower sides. So this is a really good area. I think we can try to do shots. Okay, price has been reaching through this liquidations, so probably we'll be grabbing liquidations from the 50-minute time frame. Yeah, this is 1 hour liquidity area of 50 minutes. So this is 50 minutes time frame. Yeah, 50 minutes. So probably we'll be going back on the 1 minute retracement. So yeah, we'll be continue doing shots from here. Hopefully that the price do really give us a short opportunity from here. Maybe the price will be reaching back towards this area. Once the price has been reaching back, we can try to do shots and getting at 40 pips. See. Okay, let's see how it happens. Seems like the price is grabbing these liquidations and probably will be reaching 5 minute. Yeah, this is 50 minutes. Yep, 50 minutes. 50-minute liquidity area, then we'll be using a 50-minute liquidity area as well. Price reaching through, grabbing back, reaching back to here, then continue going lower. So this is the first one, second one, reaching back, going lower. Okay, probably is going lower, but hopefully we'll be reaching back towards this area. Not so sure is it possible, but let's see how it turns out. Okay. Hmm. Yep, probably will be going lower. I'm thinking that this might be a retrenchment. Going back on the retrenchment, let's see, is there any inverse, uh, fair value gap? Yep, I'm thinking that probably here we'll be having a inverted gap. So let's see. Oh shit. Seems like price is going lower. Hey, I think that's all for today. Overall, I'm thinking that the price is going lower. Okay. It's definitely going lower. You can see that. So probably will be reaching on the lower sides and grabbing on the lower liquidity area, reaching back towards this area. So thank you for joining and hopefully that you have learned something new today and we'll be seeing you guys tomorrow. Okay,